Welcome to Stupid Money. I'm Ryan, and I'm here with my boys in finance, the geniuses that are Brasher Brown and Tammy to my left. And we're back after a little hiatus. It's good to see you guys. How you been?
Good. Not sick like I hear you were.
Hey, there's something out there that's not quite the flu, not COVID, and it will take you out for about 2 weeks, and so fun. But I saw Tammy this morning. He's like, hey, you lost weight. I'm like, mostly flu.
So always look at the full part of the cup, right?
Exactly. I lost about 7 pounds, which has been great. Then immediately after I got sick, my wife got sick, and she's not there anymore. That's how much weight she lost.
Oh wow!
But yeah, man, it's been a fun little run since we last saw each other, and the economy's still going strong. As much as people on the internet yell that it's gonna fall apart, we're still here.
Yeah,
still doing the thing. And if you want to get a hold of these guys, Edgewater Family Wealth is where you want to go. EdgewaterFamilyWealth.com. But what is going on in the world of finance?
There's crazy stocks making crazy runs. There's different, asset classes doing crazy things. Yeah. But otherwise, people are still spending money, making money, and asking some good questions, some not so good questions.
Well, I'm always the trendy stock guy. I'm that guy that just falls for it every time. So like I bought just so much Nvidia, and then it did nothing for a long time because I'm like, the AI revolution's here. Who is in control of that? Nvidia. So I bought a bunch of that, and then it's been pretty good. Not gonna lie, I feel like I'm a genius, but I'm not diversified.
Yeah.
So like, if you look at my stock portfolio, it's got 3 stocks. It's just Apple, Nvidia, and then I have like a tiny fraction of an S&P 500 stock. You know what I mean?
Well, that's good.
But I always look online, and they're always like, you got to diversify. You got to diversify. Everything got to be diversified, because if one goes down, you're done, right? So when people come to you, I'm assuming they're in the same boat as me, where they're like, "Hey, I need to diversify right now. Help me, Brasher. Help me."
Yeah. No, I mean, people. It's almost become a buzzword, I guess. Diversify.
Has a nice tone to it.
It does sound smart.
It sounds very 2024. Like, well, I really believe in diversification. Wow. Good for you.
Yeah, no, very advanced.
So many vowels.
But there's sort of levels to diversification, right? I mean, even within, if you talk about large cap stocks, you can diversify within large cap domestic even alone, right? There's different sectors. I can buy, consumer goods. I can buy food. I can buy tech. I can do all these things. And what I find, especially when we're bringing people over maybe from other firms, I won't pick on anybody, but you see they have their large cap and mid cap and small cap and international and bond, and it's sort of this cookie cutter portfolio. And in my mind, it's mostly there so that an advisor can kind of cover themselves. It's more of a defense play because it's okay. Well, gosh, they don't really need this income fund, right? Because they're 40 and they're not going to need income for a long time. But I'll sell it to them in case the other stuff doesn't go well. Because at least then I can point to 1/5 of their portfolio and say, yeah, but that one's doing fine. Or, I have this small cap or mid cap, whatever, and maybe 1 year out of 10 or whatever it may be, it performs well relative to the rest. And they can say, well, that part did fine. But you're kind of doing this teeter-totter thing. And so I think there's diversification for the sake of diversification in some cases, and some people don't really understand the utility, history, or function of what these investments are actually doing for them. So I think Tammy can kind of speak to, at least outside of the more well understood, I think, large cap domestic stocks, what are mid and small cap stocks and what purpose do they serve?
Yeah, so imagine that all companies will start at some point. They won't all start being large cap, right? Because if all the companies will start at large cap, there's no much growth left.
Right. Some companies have to be small or mid and get bigger, right? Because that's how growth works.
Exactly. So and you can imagine, if I ask you, if you look up the entire economy and tell me, what do you think number-wise has the largest number of companies, large, mid, or small?
It's got to be small, right?
Naturally, yes. So who of these small is going to survive to get to the top and become large? That's a tiny percentage. And buying a growth company, which is small, probably, you want to buy the name that will go all the way up to large. So that tells us, naturally, if you want to buy a winner from the small or mid cap, that's eventually not going to be in the small or mid cap. That's going to be upgraded up to the large cap space.
Which speaks to sort of the index fund version of this that I've seen, I think.
Yeah.
Because some people say, well, I own, small cap index. I own mid cap index. And in your mind, you're thinking, some of these guys will reach the next tier, the next echelon of stocks, and I'll participate in that. But what I think is getting overlooked that we talked about earlier was if they are that good, if you have a small cap stock that performs that well, it will then reach out of the small cap territory. So you no longer have it. It did so good that you have lost it. And so you're kind of just holding, what is it? 2,900 something, maybe not so great, small for a reason companies. And the good ones are saying, I remember when I was down there.
Exactly.
They're going big time. They're going big time.
Yeah, they're big time.
I think about this as like March Madness, right? Like we're like the team from Stetson over DeLand. They got a, and we were talking to the coach on the radio show, and we're like, how do you keep the people here? And he's like, the problem is you do something like this, and everybody gets so big, they're like get recruited by everybody else. So
it's very common.
It's just this same thing happens with stocks too. Your team does really well, and but we just lost our LeBron.
Yeah. Because all of a sudden eyes are on them, right? Because, that small cap just got on television because, wow, it's performing really, really well. And now you're getting more people to maybe buy into that company because, look, it's exciting. It's getting some recognition. And now, again, the big names, in this case, maybe, it's some type of institutional money or just large amounts of retail are taking notice of something. Just like the athlete that comes out of I don't know where, Idaho, because they made a run in March Madness. And all of a sudden, UNC sees him and goes, oh, that's a good point guard.
Yeah. But then, you get your Jeremy Lin that's going to go.
Right.
And then he's doing great. But, the stock goes down.
Yeah.
After a certain point.
I don't know. Jeremy Lin's not a great case study for this argument.
There's always outliers out there.
But yeah, and then maybe you can also speak to, because again, I think the mid and small cap representation, not that I see it as a bulk of somebody's investments in most scenarios, but I see it and I wonder, how was this sold to somebody? What was the rationale behind it? But historically, is there more downside to the small and mid than there is upside?
There is upside, as we said. It can go up all the way, but the risk is higher, especially in terms of financials. They don't have as deep pockets as the bigger ones. They don't have access to capital as the bigger ones do. Therefore, you can imagine the risk of going in there thinking, it will make it all the way to the top.
Because they have less leverage? They have less...
They have smaller sales. They have smaller revenue, smaller share of the market. So if a
their
company,
ability to, their collateral alone
they don't have
is
much wiggle room.
Yeah.
They don't have much wiggle room. When you say a Microsoft, they lose 2% of their market share, they can still do fine.
Yeah.
But you say to that one that already has 1%, it loses that 1%, it's gone.
Yeah.
So it is riskier, and therefore there are, in some cases, funds that only target that, and they look for those names, and boy, they do a lot of research to find those names.
Yeah, because, you're digging through so much. But again, I think it's the point I'm trying to make is you shouldn't diversify for the sake of diversification. Is there maybe more downside for a bulk of the companies inside these indexes? I think the answer historically has been yes. And for what upside? So at some point, I think if your advisor is having those types of conversations, you have to start to ask the advisor, right? Why? Why do I want that? When I can go find companies who are extremely well established and I'm not concerned about their debt because I know they have the collateral or the space in the market to where they can make that up. Why would I then diversify into this thing where I'm hoping on something to do extraordinarily well, only for it then to leave the category of thing that I'm invested in?
Yes.
So
in many cases, because it's cool. Just as you mentioned, the name is cool.
Trust
I want to diversify.
we have one that I've been bringing up the last couple of days. Granted, it's up like 40%. I put in $70. Okay, it's not that I bet the house on this thing and said, oh, now my life has changed because I made 40% in a week, right? I put $70 into this thing I knew nothing about. I happen to get lucky so far. It's a conversation. It's not, there's no utility.
Yeah, but I imagine it's pretty jarring for like a client to come in and they're like, I need to diversify. And you sit there and you go, no, you don't.
Well, the answer is you do and you don't, right? Because like I said, there's diversification in what I feel is a pretty responsible way in terms of if you want to look at long-standing companies where I'm not worried about if a recession comes, this company might disappear in the way that some of these small and mid-cap companies could. I can still say I'm not going, hey, every S&P 500 tech company is a good idea. Because I don't know. What if something happens? I just I don't think all consumer staples should be your portfolio, right? But I think you should have some of a little bit of everything. But do it in a realm where, is the upside 80% in a year? Probably not. But you can get something that's sustainable, that's a little more, I won't say predictable, but at least feels more comfortable without having to bet the house on it.
But that's not as fun, though.
No, it's not nearly as fun.
Well, we need fun. We have to go to another show, I guess.
I know you guys are finance guys. So I was like, it's you just wait. You invest sensibly and you wait. Who wants to do that?
It's hard
across the board. Yeah, it's got to be pretty hard because there's always that next sexy investment that's seems to be out there waiting in the wind.
Yeah, sure.
And it's always impressive that they can make something boring so interesting, whether it's I got real big into bonds in this last round, and I was like, okay, well, it's safer, you do it this way, whatever the buzzwords are going, they're hard to avoid.
Well, people like to be dogmatic, and this is kind of the last thing I'll say on this, but people like being dogmatic, meaning I like having a team to root for. And that's why, the news cycle and the media hyping something up and having this thing that you feel strongly about is so much fun, whether it be even bonds, right? One of the most historically boring investments that's ever existed. But if you bought bonds when the rates were above 5%, you're now hoping that every idiot who wasn't you didn't buy that. And so you hope the rate goes down to 3 so you can shove it in their face and say, I got 2% more than you did on my bonds. What an idiot you must be. I'm right, you're wrong.
That's the part of it that I've always enjoyed. There's almost like a fantasy football element.
Oh yeah, you want to win.
Yeah,
the
you want to win.
dopamine, man.
Everybody wants to win.
Do you guys do you just compare portfolios with friends and you're like, hey, really crushing it this week?
I am the worst.
Are you?
I am the worst about that. Be like, well, what was your cost basis? On the same thing, I'll go, what was your cost basis? Because if I beat them by 10 cents on the cost basis, I'm like, you should have known better. You should have known what I did.
I'm going to find something to compare it.
Yeah.
All right. Well, diversification. Maybe you need it. Maybe you don't. But don't pull it's odd to say don't put all your eggs in one basket when we're talking about diversification. But you can always do it. Anything else you want to touch on with that?
No. If you feel like diversifying your conversations, give us a shout.
That's cool. That's cool.
Talk to Edgewater Family Wealth, edgewaterfamilywealth.com, and we'll take a short break. We'll be right back. Hey, we're stupid money. And we're people. We're people. We're real people. We're not an AI deep fake coming at you. This isn't a YouTube ad where Mark Wahlberg's trying to sell you something. No. We're real people, and the upcoming AI revolution is something I think about nonstop. It keeps me up at night, just with what I do for my jobs, what my wife does as a graphic designer. It's something that I'm always trying to keep up with, and there's always a lot. But one name always seems to be at the top of everybody's list. Because they run it. The most of the stuff that's done through AI is done through this company, and that company is NVIDIA. Now, NVIDIA, I know, is a company I've worked with myself for a long time because I've been building PCs since I was 10.
Oh, yeah.
So I know them most of my life mainly as a graphics card company,
right?
With varying results as I've gone on through the years of different good ones, different bad ones. Never a company I thought about too much, other than when the next, version's coming out of a graphics card. I did not see this coming to where everything is sort of powered by their chips And you got their competitor like OpenAI come and say they need to raise $1 trillion to even get to the level to where they can produce their own chips. They have one major competitor, that's AMD, who you can't really run a lot of large language models, diffusion-based image creation. You can. It's a little bit more difficult. So when I look at NVIDIA, I see like, oh man, these guys are on the cusp of something different, and their stock price is just gone crazy. But I know nothing about it as an actual functioning company and what they do and everything else. So my real question for you gentlemen who are smart in this kind of thing, are we on a bubble or are we on the start of something new?
I'm scared to say bubble. I feel like that's how you end up like Kramer and people are making inverse ETFs of your calls.
Yeah, there's a whole. There's a couple forums that I follow where it's like that people just pick the opposite of what that man says.
Now,
and
granted,
they will make
he
money.
named his dog NVIDIA, so that's not even
bad.
a joke. He's been on the train the whole time. But from there's so much that can influence a stock price, obviously, and then you have to take a look at some point at the fundamentals and say, okay, well, is that sustainable? Why is the stock price what it is? And, at least from a narrative standpoint, right, NVIDIA's, from what I can recall, probably been enjoying a great 4-year evolving narrative of, okay, I'm a graphics card company and I do graphics cards for gaming and for PCs, and we're pretty good at that, right? Okay, that's cool. Gamers like that. That's good. Then you get the influx of information and kind of whatever you want to call it surrounding crypto, right? And now all of a sudden there's a narrative there because NVIDIA's technology is going to help with the production and mining of this brand new asset class, or at least brand new to the public at that time. So, okay, great. Now that story has evolved, right? I'm a good graphics card company to, okay, and now I'm helping with this thing that's apparently making people a ton of money from what the news was saying at the time. Then from there, we kind of piggyback into the AI narrative that we're currently in. And again, we'll see kind of what the actual result and utility and reality of that becomes. But now they're a huge player in that narrative. So you can see that evolution, and which graphics cards, okay, that's fine. You get people who like graphics cards for gaming, but then when you start talking about all this money in the form of, at the time, cryptocurrency, people get excited, right? Because people seem to be making a lot of money off this cryptocurrency, and this company seems to be facilitating that somehow. So they must be involved with a lot of money. Okay, stock price goes up. Then you turn it into AI is going to change the world. It is going to change the economy, is going to change the way businesses operate. So that's a lot of money. And this company, once again, seems to be involved in that. So you can see how a narrative alone can start to push a stock price.
Yeah. I mean, this happened with the dot-com bubble.
Sure. Sure. But the question becomes what's real and what's not. And I obviously, without any real vested stake in it, we've been watching just because it's fascinating both from a behavioral and from a true fundamental finance perspective of
for me it's fascinating because it seems to be the same dodos that push like your GameStop are all in on this space too, because they're also a bunch of nerds that are online, and they're like, yeah, well, we know this one, we knew GameStop, we know this one, and the culture around it seems to be the same, but unlike GameStop, where it was like sort of a meme to like jump on board with this, NVIDIA seems to be an actual functioning company that makes something that is super needed for whatever's coming next.
Yeah. Well, and again, there's a narrative. The GameStop was okay. Well, we're going to take down Wall Street was a large part of the narrative because there's this big squeeze on. There's all these short positions on GameStop.
It was fighting.
Yeah, but NVIDIA doesn't necessarily have this same, if you will, cultural clash happening between the haves and the have-nots. It's people just genuinely seem to think this is a great company, and Tammy can correct me if I'm wrong, but nothing in their earnings reports has refuted the idea that they're a great company. The question is, what stock price is appropriate for the company they are today, and how much of the current stock price is trying to price in the company they will become in the future? Then what happens if it looks like they get thrown off track and they are not on pace to become that company anymore? That's a huge question that nobody knows the answer to, of how does everybody react when the thing you thought was going to happen doesn't.
Yeah, I mean, has momentum trading always been a thing, or is it just easier to do now when you have your retail investors?
It was probably harder to do when you were checking the newspaper in the morning to see what a stock price did, you know, because at that point it's a little delayed.
That's so funny. I've never even thought about that because I've only just come up in the world where you can just like look on a computer. But a newspaper comes out. I remember it would have all the stock listings.
It was on Seinfeld. That's the only reason I know that existed.
And they would it'd have one price, and that's just the price for that morning, and you really couldn't do anything.
Yeah, that's it. Unless you want to call in to your broker and say, what's the price now?
Yeah.
And they would have that revolving.
And then you got to pay 25 cents at the payphone, you know?
Yeah.
It sounds like the Stone Age. So, yeah, I guess it would have been super difficult to do that now. And so is momentum and like essentially, you know, shenanigans priced into a stock?
It can't. Well, I mean, what was the one we were talking about this morning? There was one stock, this company, right, where people were hyping it up. It was really exciting. But I guess the ticker for the actual company was nothing like the actual name of the company. So this random company with a ticker that sounded like the real company just bolted one day because everybody was buying the wrong stock by accident.
Wow.
So yeah, momentum is a very real thing.
I got tricked like that one time. To be perfectly honest, I have a stock that I still own to this day, and I won't sell it because I'm mad because that admits that I'm an idiot. But it was definitely like it was like one letter off or something, and so I own that. I believe it's a dental company.
You think? We don't know.
I literally have no idea. But is there such thing like, you know, tech has disruptors where they come in and then they, it break it till someone tells you not to. Mm-hmm. Does that happen in the stock trading and all that in the finance market as well? Where are there actual disruptors that come in
terms of traders or in terms of companies? Because of companies, yeah, of course. In terms of trading, I guess
It becomes like a popularity contest.
Yeah.
Whatever gets the hype, and you get all these momentum coming in, and then they start buying derivatives and up and down, and then you see these huge movements, although financially it's not backed by anything.
Right. And then you start bringing in, and again, this comes back to, I think we've talked about this, at least you and I have talked about this, of who's playing the game. Because once you get that type of movement and that type of popularity, now you're likely introducing some form of volatility. And where that volatility can be found, you're going to start attracting a whole different breed of investors who really don't care about the company. They care about the price movement.
Yes.
And they're going to try to capitalize on up or down given any day. So yeah, popularity can certainly do some wacky things to stock prices, but I think part of what we're looking at is, again, from a fundamental standpoint in terms of what does this company produce in terms of revenue, what should they hold in terms of debt, you know, is their productivity up or down? NVIDIA is seemingly on a promising trajectory, but the question is we have to look at the stock price in relation to that trajectory and say, okay, where does it stand today? Which I think you can speak to, at least in terms of certain ratios and metrics we use to sort of establish what a stock price should or shouldn't be.
Yeah, I mean, price to earning, I think it was north of 77. So
explain price to earning.
So it's the price you think, or an investor think, or the market in this case, thinks is worth $1 of earnings. And in that case, the market thinks that $77 for $1 of actual earning from the company is fair to that price. Now, if you are a value investor, put a quotation on that, you'd like to see that number even below. Like, you really want to see it very, very low.
Like, what would be a good number?
It depends on the industry. So not all industries have the same. So you compare it to its peers, and you think, okay, well, if all the companies that make chips and they're also involved in the same technology have a PE of, say, 100, then this one is undervalued from just that one metric.
Right, and just to make sure we're clear, because we're going to get into the weeds a little bit here, so I want to make sure we don't skip any steps. But what you're saying in that instance is, okay, if it's normal for 100 to be the PE ratio, meaning that for every dollar that company earns, the stock price is worth $100.
Yes. You're paying $100 for $1 of earnings.
So in that scenario, if that's the average in any given in a given sector, and you find something that's worth $50 for its PE ratio, meaning for every dollar of earnings, the stock price should be $50, then you would say, okay, from a value investor's perspective, I've just found something of value.
Yeah, you found
undervalued relative to the rest of companies like it.
Yeah, you found like a trail. because we don't just buy based on PE ratio, but that's just one hint. Like, okay, I found 1 point. What about the other ones? If they all match, then you say, well, that more like a value play. But on its own, doesn't mean much.
Interesting. Do you find it frustrating to talk to I'm trying to the best way to put this, like a retail investor? Someone's coming to you and they've kind of done everything for themselves, and then they explain to you their stock plan, which is all based on intuition, gut feeling.
I literally just got out of that meeting.
And and you guys are doing this, like, you got to do the P to E ratio, all these different numbers. Do your eyes just glaze over like you're talking to a bird? Like you have no idea, little bird, what this actually takes. Because that's kind of how I feel sometimes when you guys do this, as somebody who goes from like just gut feeling and straight hype. To doing that, but like the momentum thing is so real.
Oh yeah,
where people jump on board. There's this almost unquantifiable version
FOMO.
of traders.
FOMO, exactly.
It is,
Okay, perfect. Yeah,
that's literally what it is called now. It is FOMO trading, right? You'll see something that is at an all-time high, and maybe it's all over the news, because it's up 300% in the last year. And you fear that you are missing out. Look at all these people who are making all this money. I am missing something. So I'm going to jump onto that momentum train and hope that the end is not near, because I don't want to be the one who didn't get a piece of the pie at the end of the day. Mm-hmm. So that's a real thing. And I get it, just from I don't even know if that's evolutionary, but from a social aspect, I understand. And I'd be lying if I said I've never been guilty of that myself. I get it. Is it always the correct way? I would guess statistically no.
Yeah.
Well, something like NVIDIA is, I always look at it like it's such uncharted territory. I look at it as like when the internet was in the 90s. It's the Wild West. There is not a ton of regulations on what's going on in a lot of the spaces they work in, whether it is AI or Bitcoin, things like that. And it's coming out hard. It's coming out fast. And you see something like, I believe there's a proposed 20% tax on Bitcoin that the Biden administration wants to do. So when news headlines like that, that'll make, price go down. There's a version of like, this whole AI thing in general could become illegal. Just unfettered, do what you want kind of stuff. And so the news also plays this other side to it.
For sure.
Of course, yeah. I mean, whoever publishes that, you don't know what they're aiming at.
Right. Mm-hmm. Who knows what their agenda is?
Exactly.
Meaning they might have, whoever controls that news company might have a vested stake in something, and it would benefit them if you thought the way they did.
Is it helpful to know the biases of your news sources as an investor?
I know Tammy has a website, right? That'll state, where these claims are all
on
coming
which time of the spectrum, like
is it? Do you use Ground?
Yes.
Okay, yeah. Because I was thinking about that. Like that's. Yeah, you don't. They're just people that own it. You know what I mean? Like Bezos has a newspaper and media companies, and I never thought of how important that is, because I believe that one that you use will show how two different sides will report the same thing.
Yep.
And I found that incredibly helpful.
Exactly. Yeah.
But again, this seems like something more along the lines, whatever AI company or whatever like chip, anything in that space. It does seem like we're on the cusp of something else, which for me makes my investing so much more important, because I don't know what my actual job is going to be coming up. I mean, there's versions of like when my wife doesn't need stock photography anymore, and she just uses prompts on an AI to get her the exact image that she needs of a doctor holding like a cat, maybe something random for an example, but she would spend hours just searching through stock photography, doing that kind of thing. Now she can just highlight with Adobe, make this a cat, bam, done. And we're still in the fun stages of this, right? Like people, I have a buddy who like shows me his AI art all the time. He's like, look what I made. This is so good. And I made this. And I'm like, you didn't make anything. You typed some words. Yeah, but they're my words. I'm like,
they're my words.
Not exactly a thing. There's been, and I do stand-up comedy also. I mean, there's been comedy specials released by, George Carlin, AI George Carlin, things like that. One thing I'm thankful for, AI is not funny yet. It's just, it's not good at being being funny.
I wouldn't imagine yet.
But it can tell you, it'll do a bad joke. And I find this
In
part
the style of.
Well, no, but it'll do a bad joke and tell you why it should be funny, and it's not wrong.
I've told
which
jokes
is
like
the weird
that.
part. Yeah, that's just me at a party, ruining it all. But so, how do you know when something is hype? Is there some? There's the P to E ratio, of course, but
I think it's difficult to fully say what is hype and what is real, right? Because the argument could be made right now that according to NVIDIA's PE ratio today, maybe the stock price doesn't make sense. Maybe it's inflated. Maybe there's a lot of hype around it. But one could just as well argue, well, I'm not buying at the price I think it should be today. I'm buying at the price I think it's going to be or can justify in another 5 to 10 years. And that's where it gets more difficult to say, well, where is and when is the landing spot? Right? Because as long as their earnings come out and they keep beating expectations, you can continue to justify paying more and more money for the stock because I'm saying, well, I still think it's going to become a company to where at whatever stock price it's at, that something like a PE ratio starts to become more normal because the company's going to grow into the stock price, not the other way around. That becomes difficult, right? I don't know how to tell somebody they're wrong yet. I don't have the numbers to say, no, that'll never happen. As it's the case with any stock, right? Stock could be in the gutter, but come out with the best thing in the world tomorrow. Stock price jumps up. I could say, oh, well, I didn't think they were going to do that. So there's no right answer, especially when it comes to hype. But there is, at least for what we do, right? It's grounded in something that has to do with probabilities, that has to do with norms, that has to do with kind of creating at least a thesis for expectation.
A discipline. And then we're not 100% right all the time. But the idea is when you have a discipline that you follow, and if you're right most of the time, that's what we aim at. Because you're following a discipline instead of being, oh, it's just what I feel like, or I read on the news, it's going to do that. Those guys might be right too. But there's a difference here because in that case, you're totally random. Statistically, when you do that, you have to be right every second of the time when it's whim because they're bidding everything down.
The thing I'll end this with that I read a few weeks ago that's just coming back to me because I thought it was so important. You can buy something. Let's take a stock, for instance. You can buy a stock for one reason, and you can be right in terms of the stock price goes up. Where your due diligence lies, and where our due diligence lies, is when we pick a stock and it goes up, were we right for the correct reasons? Because I can be right in terms of I think this is going to go up, but it might go up for a reason I didn't see. And so you have to be just as willing to look at your losses as your wins to decide why did those things happen. Because if you get lucky a few times, you might have a huge oversight that you're not recognizing because you didn't stop to think, why was I right?
I've never thought about it. Do you feel like you learn more from your losses or from your gains?
The only thing I've learned in my losses is I was ahead of my time.
Fair enough. Well, if you want to be ahead of your time, Edgewater Family Wealth is where you want to go. EdgewaterFamilyWealth.com. Thanks for hanging out with Stupid Money, and we'll see you after a little break.